I just watched a video yesterday. 5 years of trading summed up in 5 minutes or something to that effect. There's a lot of these videos out there, and I wanted to do one. I wanted to participate and share. In full disclosure, I've been trading for a long time, but I'm not quote unquote profitable. I'm one of those guys that's been up and then you lose it all, and you get up and then you lose it all, and then there's this struggle with profitability. So on the one hand, you'd say, well, why in the world would I want to listen to you to, get some insight, wisdom, knowledge from you if you're not even profitable? And I get that, but definitely wanted to do two things. One is speak to myself. A lot of the folks that are profitable, at some point they'll make a video, well, they'll go back and they'll share with you journal entries speaking positivity over their psychology, over their trading. Journal entries of, today I will be patient. Today I will wait for my setup. So with that being said, part of what I'm doing, part of why I'm doing this is to speak to myself, to encourage myself. Encourage myself with how I want to be, the trader that I want to be, the person I want to be. Speaking those things out loud, putting it out into YouTube land. And so positive self-speak and affirmations are in part what I'm doing here. And secondly, in 5 years, I've learned a lot. Well, obviously, I've learned a lot about trading, brokers, candlesticks, patterns, that technical piece of it. But I've also learned a lot about dopamine, psychology, patience, emotions like greed and fear. So, want to share a few things with regards to those as well, what I've learned. So let's go. Let's jump in. In America, as a man, we are taught, hopefully, by a father figure, a grandfather, a mentor, that you need to work. You work hard, you put in time, you put in effort, and the end result is going to be money, success, a salary, etc. So this modern male American, mental framework is grind. And so we, myself included, came into trading, started watching YouTube videos like you guys are watching right now. And we bringing this mentality of work into trading. We've got this faulty framework that the only way to make money is to win trades. You have to enter a trade and you have to win it. That's the only way to make money. When I say it to you like that, you're probably thinking, well, yeah, that's right. I mean, duh. You obviously can't make money if you're not in a trade. It sounds right. And on one level, I guess technically, you can't make money unless you enter a trade. So to some degree, it is right. I'm not saying it's not right. But the framework, the thinking, the mentality of you have to participate in this market and be correct, that framework is what's making you unprofitable. So 5 years later, I've been trading about 5 years. My framework is shifted to a profitable mentality, psychology framework that I'm bringing to the market. And in general, that new framework is summed up in one word, and that word is patience. Now I understand I don't need to drive, trade, attack, be in this thing, catch every move, get up at 6 a.m. and grind. No. I need to have one setup. I like that word better than strategy. I've got one setup that I like. And what I need to do in order to make money is wait for it. So today, I may not get in a trade. Why? Because my setup's not there. Tomorrow, I may not get in a trade. Why? Because my setup's not there. But on Wednesday, the third day of the trading week, my setup is there. And so now, using an appropriate level of risk, risk management is important. We'll get to that in a little bit. But enter that trade. So a couple more things that I've learned that we'll get to in a little bit. But there's a pretty good chance, 50-50 or better, that I'm going to win that trade. And if I win that trade, I'm using a risk to reward ratio where I'm going to win more on my winners than I'm going to lose on my losers, if that makes sense. So if every time I win a 2R, and every time I lose, I just lose a 1R. So a 2-to-1 risk to reward ratio. At a 50% win rate, if I've got a 2R winner, a 2-to-1 risk to reward ratio, then I am absolutely going to be a profitable trader. So I was patient on Monday and didn't take a trade. I was patient on Tuesday, didn't take a trade. Patient on Wednesday, took a trade. And let's assume I win. So I make money. And then Thursday and Friday come and there's no setup. So I made one trade this week. It wasn't so much that I was right, but let's assume that it's a profitable trade. But I didn't lose money. I didn't throw money away. I didn't give money back to the market Monday, Tuesday, Thursday, Friday. I kept that money and I'm rewarded. So at the end of the week, I'm net positive money. And that patience is what does allow you to make some money and keep that money. That is so hard for me as a American male to do that, to open up your charts on Monday, watch it for a while, and not take a trade, close your laptop, because the world, people, your spouse, your parents are going to say, what'd you do today? Or you're going to say to yourself, what'd you do today? And on the one side, nothing. I didn't take a trade. I wasn't a day trader today. I didn't trade. I wasn't right. That framework of needing to be productive will absolutely sabotage you. Profitable traders understand this, and they have come over to this alternate framework in psychology where they understand that no, it's patience that is going to reward you with money, discipline that's going to reward you with money, and I have 5 years later figured that out. I've had strategies forever, but I've always had this grind mentality, and so I think I'm at a pivotal point now. I'm actually in a challenge right now, a trade day challenge. I got to make 6% before I lose 3% is the basic challenge that I'm in. I'm up 1%. I traded all last week, and was patient. There were several days where I did not trade because I'm only trading one setup, and that one setup wasn't there, so it didn't trade. So let's talk about, I think that's enough of that. Let's shift gears a little bit. I do want to throw in some other pieces that I think are important to what I've learned. Risk management. Let's talk a little bit about that. For me, a appropriate amount to risk on each trade for consistent, sustainable growth, one that doesn't invoke significant amount of fear, greed, or pain, is a 1% risk. So whatever your account balance is, let's say it's a $100,000 funded account, you're going to risk $1,000. If you only have $1,000, then you're risking 10%. That percentage is such that it's such a 1%, it's such a small percentage that there's not a lot of dopamine associated with a win or a loss. It's just 1%. That detachment from dopamine is really, really, really important for sustainability and managing or even avoiding killers, profitability killers like greed and fear. Now, if you don't have a lot of money, $1,000 or $2,000 or $3,000, I understand. I mean, unless you're trying to trade that's your money, your capital. You're trying to trade that. I understand that trading 1% of that capital, $10, like literally a $10 trade, and let's say you win a 2R multiple of it. You risk 10 in order to make 20, and you win. So you won $20. That's not a lot of money. And if you are, going back to my previous point, if you are being patient and waiting for a setup, or one setup, and let's say it only comes once or twice a week, so you make $20 or $40 a week, $20 a week, that's not a lot of money. On the one hand, I understand, well, what's the point of that? $20 a week, that's non-money. That's not life change. That's nothing money. However, to reiterate my point, that 1% not being a significant enough amount of money that your emotions are triggered, your heart is racing, you're sweating, it's just such a big deal to you, is a good thing. That low percentage of your total account balance is a good thing. So in my opinion, for somebody without a lot of money, a good way to, on the one hand, make life-changing money, enough money for you to quit your job, enough money for you to pay for a new car, to make good money, and at the same time keep that 1% risk per trade? How do you do those two things? And the answer is you get funded. You buy a challenge, a $100,000 challenge, and you employ that. Even the challenge alone is $100,000. So you're now risking $1,000 in order to make $2,000 on these trades. And so in this challenge, you can use that appropriate risk management of 1%. And after, let's say you make 2% on a winner, you only need a handful of winners in order to hit that profit target for that challenge. You can do that in a few weeks, a month, whatever. You do that, and now you are funded, and so you now have $100,000 that you can trade with. You got $100,000 of trading capital in a month, and it didn't cost you hardly anything. That is a amazing opportunity. I'm a proponent of prop firms because you can get access to enough capital, 100 grand or more, such that you can risk 1% on your setup. And if you win, because you're trading $100,000 in capital, if you win, it's going to be significant money. You risk $1,000 to make $2,000. So now I win a trade and I made $2,000. Obviously, there's going to be a profit split. You don't keep all 2,000 of that. Most prop firms are going to let you keep 70, 80, 90%, somewhere in there. But for most people, myself included, $1,500 is good money. I mean, that's a lot of money. That's it's either enough for you to quit your job, depending on what kind of job you got, or at a minimum, it's enough to pay a car note or two or three or a mortgage or something like that. That's significant money. So to summarize, all of that had to do with risk management. To summarize, risk 1% on each setup, each trade is a definite piece of this success puzzle. It prevents you from blowing up these accounts. It prevents greed and fear from wreaking havoc on your emotions in a trade or after a trade. So that's a little bit on risk management. Let's talk a little bit about some more psychology stuff. Fear, greed, revenge trading. I have most of this 5 years, not all of it, but a lot of it have been in demo mode and simulation mode. I've had times where I've got in with live money, lost it all, come back to the drawing board in demo mode, and surprisingly, there's a significant amount of psychology that's still at play, even in this simulation mode, in this demo mode. I think we still have so much of our who we are as Americans, as men, as women, it doesn't matter, who we are is wrapped up in the ability to do this, to be successful, to not be a quitter. So there is a significant psychological piece at play here. My understanding of how significant bad psychology can mess you up, screw you up, sabotage you, has led me down this road where I'm basically trying to trade in a way that removes as much as possible of that. And what I mean is, a couple things. If you sit on the charts all day long and watch them, your psychology and your emotions are constantly at work. You're constantly going to be in this battle of wanting to jump in. You see a big move, you want to FOMO into that, or so I'm not a big fan of sitting on the charts very long at all, because it's psychologically so bad, so hard. So I am a proponent of having a small, and that's relative, but a small window of time where you can sit and look for your setup, and then if it's not there, you close your computer and you go away. You don't open it up, check it. You don't sit on the charts on your lunch break. You need to detach trading and dopamine. Trading and a challenge, trading in a puzzle, trading in this thing that you're trying to beat, trading in your sense of worth as a man. And one way to do that is to not trade hardly at all. So I'm going to look at the charts every day, but not for very long. And don't confuse that, again, back to my earlier point of grinding, working, just this male framework of you got to put your time in. No, I am now managing my known psychological issues, normal issues of fear and greed. I'm now managing them on purpose by self-limiting the amount of time I'm spending sitting in front of the charts. So for me, my setup is right when the New York stock market opens. I trade NASDAQ, trade the NAS 100 on the futures, and there's a setup. The setups don't matter, but there's a setup that I'm looking for that plays out in the first two candles. So if my confluences are there and the first two candles agree with my confluences, I'm going to get in. And then the second piece of this psychology puzzle is, when you get in that trade, if you sit there and watch it, and your P&L is up on your screen, or even if it's not, but for most of us, you can see that P&L going up or going down, and it's such a hard thing to remove your emotions from that. You can see you're making money, you're losing money. It's going to be a good day, it's going to be a bad day. It's so it's almost impossible to not be affected by that. So what can you do to remove that psychological situation from the table? I tell you what you do. You you enter a trade and you close your laptop. You enter the trade, you waited. It finally, everything aligns, your confluences are there, you enter the trade, you have your stop loss and your TP set, and you close your laptop. And you don't look at it, don't open it, don't set alerts, don't do anything. And you're either going to hit a stop loss or you're going to hit a TP. That detachment for that entire day, whether I won, whether I lost, whether I'm up, whether I'm down, what's it doing? It's moving in my favor. Oh no, it's retracing back towards, my entry point, or even worse, down towards my stop. All of that's gone. All that's gone. You're not looking at it. So building a system, a trading plan that removes as much of the psychological sabotage from the table is a good thing. And again, you got to change your framework from this trade. I'm a trader. I do this. I traded for 6 hours today. And you got to take that and throw it out the window. And this is weird. Again, I'm trading. I'm on the 5-minute chart, and I'm looking at the first 2 candles. So, and I don't even trade. But basically, I mean, I could open up my chart at, again, I'm on a 5-minute chart. So from 9:30 to 9:35 is my first candle. From 9:35 to 9:40 is my second candle. I could open it up and look at it and see immediately, hey, I got my confluences here and my first 2 candles are in agreement. Let's jump in this thing. I mean, there's no pre-market analysis. There's no up for 30 or 40 minutes. There's no daily bias. There's nothing. This detachment away from grinding, this detachment away from dopamine, this detachment away from work, I think is what's going to allow me to become profitable. It's boring. It's stupid. It hardly takes any time. There's no emotion involved with it. Just continuing to detach and detach and attach all of these problems, these things that wreck traders, detach them from my system, from my plan, I think is going to be key to me ultimately being profitable. Is this going to be fun? No. Is there going to be dopamine associated with it? No. It's not. And I love trading. I mean, I love trading. And maybe that's part of the problem. Because I enjoy it so much. I love problem solving. So here I am 5 years later, and I think I've solved the problem. But for 4.5 years or whatever, what I thought I was going to be solving was the strategy, the end all, the be all, the golden strategy. I solved the strategy. No. When you solve the puzzle in trading, the answer is not a strategy. The answer is you. You solved you. You solved your psychology. You solved your discipline. You solved your patience. The strategy is stupid, easy, dumb. Chart go up. Press the buy button. And as a man, as somebody who wants, my kids and my spouse and people to be proud of me, we inherently want to have this complex, complicated thing that we built, we solved. No one understands it. It took me 5 years and I finally got this thing, like complicated thing, figured out. We don't want to say after all this time, no, it's just dumb. It's just some dumb little pattern. But it is some dumb little pattern. The answer to the puzzle is solving your patience and psychology and your discipline, and building a system, a framework, whatever it is, for you that allows you to figure yourself out and then build something that works to minimize all these sabotaging things, and allows you to be patient, be disciplined, jump in trades, you win them, and just do that consistently without blowing up, your account without revenge trading, losing a trade and then going on tilt and jumping right back into a trade going the other direction because I was wrong here, so I must be right here. The market, whether it's manipulated or not, it's almost like it's designed to wreck people both ways at the same time, which seems crazy. Speaking of that, I would say yes, it does seem manipulated. It does seem like it's designed to wreck people both ways. The setup that I've finally settled on is one that acknowledges most days it's going to mess these people up. It's going to mess them up. It's going all over the place. But every once in a while, once a week, it's just smooth and it moves. And when you look, if you were to take a snapshot of a 5-minute, in fact, this is what I did. Go into TradingView, wait till 9:45, get on a 5-minute chart, and take a screenshot of what the market looks like for those first 3, 4, 5, 6 candles. Do that on Monday, do that on Tuesday, Wednesday, Thursday, Friday. And then take those snapshots, screenshots, however you want to do it, print them out and put them on your wall, drag them over into Google Slides or whatever. But if you look at the chart as a whole, Monday, Tuesday, Wednesday, Thursday, Friday, you will notice the charts don't look the same. Most of those days, it's like, whoa, all over the place, up, down. It's sucking people in. It's chopping them up. It's garbage. But there will probably be 1, maybe 2 days where it's just smooth. So my strategy, my setup is just to be aware and acknowledge that most days this market's going to chop people up, but once a week, the market looks smooth and it's going to trend. I don't know whether it's going to trend up or down. I don't care. I'm not a long-term holder, but I'm going to be patient, wait for that day when it appears as though it's going to be a smooth trend, get in the trend, whichever way it's going, set an appropriate risk of 1%, try to get, set an appropriate take profit that's more than a 1-to-1. So I usually try to pick a level, an appropriate level that I think it might go to that's around a 2R multiple of what I'm risking. It doesn't have to be an exactly 2R. Sometimes it's going to be a little more. Sometimes it's going to be a little less. Get in that trade, close your laptop. That's the strategy. The strategy is be patient and look for days that are smooth and trendy, acknowledging that most days are not. So again, this isn't some super hard, complicated thing. If you want to put in a indicator or two, I do, that kind of helps as a confluence with, all right, well, let's say EMAs. My 200 EMA is headed up and my 20 EMA is headed up. All right, there's a confluence. So, if my EMAs are headed up and my first two candles are headed down, then my EMAs and my price action are not in agreement, and that's a no trade day. But if my EMAs are headed up and I have nice, smooth, my first two candles look good and they're headed up, bam, confluence, and you're going to get in. I personally also like the MACD, and so that is another indicator that I'll have down at the bottom. And you could pick anything. If you don't know how to do the MACD, throw a super trend or throw just a dummy indicator on there that's just so easy. It's just one confluence. So for me, I'm looking for a MACD, I'm looking for my EMAs, and I'm looking for price action to be in agreement. And if they are, and the first two candles, the price action looks like it's not crazy, then I'm going to get in, and that's the strategy. So strategy is easy. I've got my psychology in check by not watching my trade, entering it and closing my laptop, and don't look at it. And then my risk management, trading an appropriate amount of my capital, 1%. So take all of those pieces, those three legs to the stool, to the trading success stool, your setup, your risk management, and your psychology, and kind of building this framework. And then if you can take those and apply them under 100 grand in capital via a prop firm, then I think you're going to be good. And that's where I am right now. So, I'll check back in with you guys. I don't know, in a month. I'm hoping I've got to make 6% on this funded challenge before I go live. And if I can make 1 or 2% per week, remember, I'm only placing one trade per day, and most of the time I'm not trading at all. So I might only trade one time per week, and hopefully making 2%. So 2, 4, 6. I mean, that's assuming you win all three trades, which you probably won't, but assuming you win all three trades, that's 3 weeks right there. So let's say you lose one of those. I mean, you're looking at a month or so. So I'm going to post this. Let's come back in a month and do a recap, and see how was my discipline, how was my patience, and we'll give you guys an update. Hopefully this was beneficial and helpful to you. Regardless of where you are, I want to give you a word of encouragement. Hang in there. There is absolutely nothing on the planet that has the potential to change your life in a significant way like trading. For me, I know that. For me, I have to get this. I have to make it work. I want to change the life of my kids. I want to change my life. I want to be able to teach something to other people that changes their life, and trading can do that. So hang in there. And one last thing here. Switching gears, God is good. Life is hard. And day trading is a tool that God can use and you can use. Y'all can do this together to impact you, your family, your friends, for good. So praise Jesus, hang in there, and hope this was beneficial to you. Until we meet again.